G'day there, welcome to the week ahead on the 13th of December. Heading towards Christmas time now. Things might start winding down, although we've got the expiry in the futures and options in the US at the end of this week. So that can often see some pretty big moves. Last week we did actually get a weekly buy pivot confirmed. So it's a big, strong bounce back. I'm still a bit wary after seeing that really big volume selling in the last few weeks. But, maybe that's just on the back of that Omicron variant. And now that that fear is out of the way, boom, it's taken off and created the weekly buy pivot. So on the weekly charts, very, very strong trend. We've known that the trend to the upside is incredibly strong. And this could be that little weekly sell pivot, just a little dummy. So this is why it can be useful using these pivots to sort of inform what you're doing, because very quickly to change tack. So for me, I'm just backing off on being bearish while this weekly buy pivot's in place, especially because we have such a strong weekly uptrend. I'm still happy to have taken some profits prior to the end of the year. I'm a bit wary of what's coming with those inflation figures, huge, and really surprised by the reaction in the markets that stocks rallied. Perhaps we'll see a bit of a shift this week, and perhaps there's that buying the Santa rally towards the end of the year, which is holding everything up. But just following the charts, weekly chart on the US S&P 500 now looks brilliant. There's nothing to stop it. And this next few weeks, we all know that Santa rally can really get things going. It'll be back to an all-time high. All looking constructive, actually, for more upside. And just looking at this weekly chart of gold, it's been a tough old market to predict gold for quite a while. We've been in this 15, 16-month consolidation, and it's still really not able to break away from that. I have been showing you my sort of analysis of this correction with the calculations of the midpoint, that point of control, which we know about. Market got rejected from there recently, but prices have pulled back into the buy zone, and we're definitely seeing a bit of buying pressure that we'd like to see in this area. But really, it's not out of the woods yet. So for gold, I really need to see a weekly close to create the weekly buy pivot, and that would be a weekly close above 1808. Price is currently 1785. So we need prices over $20 higher on a weekly basis, closing on the Friday, and then we could be off to the races again, but not out of the woods yet. Which is pretty interesting. I would have thought gold would be catching a bid in this market environment, but with short-term rates rising, must be the cause of the selling. Oil prices have certainly perked up after that Omicron scare getting reversed, and if you've been following along, when prices were rallying, we had a target, back towards that 2018 high. And prices really only just tapped that high before turning down. And then we had the weekly sell pivot, and I was saying, look, it could head back to $70. It ended up hitting below 70. And the way I was analysing that at the time was just really looking at the buy zone of the most recent wave to the upside. So if we're just following along on oil prices, we've got this pretty clear wave structure developing. And we had this most recent wave. So we're just looking at that most recent wave to the upside. So if we just look at that wave up close, you can see that the buy zone of that little wave coming in there around 67 to 70 bucks, which is why when it was up around here, I was saying we could see more selling pressure down towards $70. And look, I was getting worried that it was going to take out that low of the wave, and it still could do that. It's not totally out of the woods yet, but we are seeing buying pressure where we'd want to see it. the buy zone of the most recent upwave within that longer term uptrend. So, the upside's still intact there, but we would want to see a weekly buy pivot, I guess, to really confirm that oil prices are turning back up where you'd expect. And we know that above that sort of $88 to $90 area is where oil prices can really take off up towards $100. So yeah, it's all still looking constructive for oil prices. Not totally there yet as far as saying it's definitely heading back to the upside. And I'd need to see, a close above $77, and we're currently at 75. So a weekly close above $77. All of a sudden, oil prices looking pretty hot again, and that strong uptrend just looking like it is continuing. So really just a short-term scare back to buying pressure due to that Omicron fear. So really all constructive, close below that wave low around $65, and things will change. It'll look a bit more negative. But yeah, oil prices looking constructive. Bitcoin, on the other hand, I think still looking negative. I think you've just got to follow along. I have been calling Bitcoin pretty well recently, looking for prices to weaken after we got the false break of the high, the weekly sell pivot. Then we got another really strong down candle on the weekly. So I make calculations off that, the midpoint of that coming in around 52,000. And I reckon the selling pressure would come in around 55 to 57,000 if we do see a rally from here. So it's still now quite a bit of selling pressure above the market, and would need to see a weekly close above 59,000, creating that weekly buy pivot before I turn bullish on Bitcoin again. But just looking at the up waves on Bitcoin, it is still intact. So we need to see prices heading below 40,000 to really get quite concerned, and we're not there yet. So after that big smashing, the point is that we've got very strong upside momentum, and we've just seen quite strong downside momentum. So we have two very big forces at play that are still looking valid. So you can look at either angle and make a case for them still looking okay. We're not at the point where it's really the selling pressure wins yet. So it's still a bit iffy right here, and we may be in for a bit of work before deciding on what direction it ultimately wants to go in this next period. So I think it's quite tough making any big calls, but for the moment I'm going with that weekly downtrend, saying things look negative, and that we need to see prices a weekly close above 59, 60,000 before I change that view, and heading below those lows is a bit dangerous. That's where it could accelerate to the downside. So that's it for today. Not that much going on, but that shift to a weekly buy pivot in S&P 500 means I've got to just back off that short-term bearish view, let the market play out, and we could be in for a bit of a Santa rally. But I'd be nervous buying it, quite frankly. We'll see how things play out after the end of the year. That's when you can see large volatility because there's no liquidity around. But for now, short term, looking pretty good.